Why did super contango happen in 2020 oil markets? Imagine a situation where the price of oil today is way lower than what traders expect it to be in the future. That's what super contango looked like in 2020. It was a strange and extreme market condition that caught many off guard. To understand why it happened, let's start with what contango really means. It's when futures prices are higher than the current spot price of a commodity. This usually happens because of costs involved in storing the commodity, like insurance, storage fees, and financing. These costs make future prices higher than today's price. In 2020, the world was hit hard by the COVID-19 pandemic. Lockdowns and travel restrictions slowed down economic activity everywhere. Oil demand dropped sharply because fewer planes were flying, factories slowed, and people stayed home. At the same time, oil producers kept pumping oil at the same or even higher rates, leading to a surplus. This created a huge supply glut, meaning there was more oil than anyone needed or could store. Storage tanks filled up fast, and the cost to store oil skyrocketed. Because storage was so limited and expensive, futures prices started to rise even more compared to the spot price. Traders saw this and expected the situation to continue, pushing futures prices higher. In April 2020, the spot price of West Texas Intermediate crude oil actually turned negative for a short time. That meant holders of physical oil were willing to pay buyers just to take the oil off their hands because they had nowhere to store it. This was a clear sign of how extreme the market had become. Super contango signals a market under stress. Traders could buy oil cheaply today and sell futures at a higher price, making a profit if they could store the oil safely and manage the risks. But this wasn't easy because storage costs were so high, and prices could change quickly. The market tried to fix itself by encouraging oil producers to cut back on output. Countries and companies agreed to reduce production to help rebalance supply and demand. In the end, super contango in 2020 was caused by a perfect storm of demand collapse due to the pandemic, persistent oversupply, and a shortage of storage options. These factors made futures prices soar above spot prices, sometimes by a huge margin. For anyone investing in commodities, recognizing when the market is in super contango can help you understand the risks and opportunities. It shows how extreme conditions can distort normal price relationships and create chances for arbitrage, but also how risky those chances can be if the market shifts suddenly.